Paul, let's take a look at Square.
Okay, Square. I have a little beef with Square.
Go ahead.
I've been reaching out to Square because we're trying to get ourselves off of Patreon and onto our own website. Square, I reached out to them. They called me within minutes. Let's do this. They said, we'll get you a quote by Wednesday of last week. I emailed them Thursday. Where's the quote? No answer. I emailed them again today. Where's the quote? No answer.
No good.
I'm a little peeved.
I'll tell you what, the racket these guys are pulling with the eBay, the PayPal, the Squares. I mean, I swipe a credit card for my clients and the amount of money they take. I mean, I know they're building a system and it's not possible. Boy, oh boy, it hurts sometimes to give them all that money. So here we go, Paul. This is Square.
Well, Square is $105 billion. Very reasonable PE of 293. That's an X. 2.72 profit margin. That's an X. No dividend yield because they have no money. All right, so far, 2 X's. I'm sure income statement's going to look great. Revenue growth. Wow, look at this, Seth. 1.79 to 13.2. And look at the growth in the last year. Yep. This is clear because so much online buying in the last year. Do you see this?
Do you think that 13 is sustainable?
I would think almost tripling is probably not sustainable, especially because of a pandemic.
With some of your businesses, my apologies for cutting you off. With some of your businesses, I feel like once you start with some sort of payment system, I don't switch. I just say, you know what the hell, I've got the readers.
Well, it's not about that. It's about the fact that so many users have to go, they actually buy online. I'm not worried about people hiring Square.
Oh, I see.
This is because a lot of users probably had to buy online because they couldn't go to stores. Because they get a percentage of that revenue.
Of course.
Do you follow what I'm saying?
I do. I'm just saying how.
Now I think next year, I doubt it's going to be as good in terms of number of people buying.
I see.
Now, it could be a plateau. I don't know.
Okay, pillar number 4 is profit growth over the last couple of years. I'm sure it's exploded as well.
Well, they've lost $90 million to making 358. Check mark there.
Check, please.
Okay.
How about shares outstanding is pillar number 5?
Not surprised here. 366 million to 455. Another X. They just issued a ton of shares, guys.
Oh boy.
Probably because a lot of growth. They're trying to make acquisitions, trying to hire people, give them stock options, etc. Balance sheet: $9 billion in current assets, $5.5 billion in current liabilities, and they have enough cash to pay off all their liabilities. Great work, guys.
That's pretty good. How about free cash flow growth?
Oh boy.
What do you got?
Free cash flow: 56 down to 16. That's actually an X.
How could this happen, Paul?
There was probably something in the operating, because look at the operating cash flow. Went from 80 to 162, but from 550. So their revenue jumped up 3 times, but their free cash flow plummeted. An average of 200 million. 200 million times 20 is 4 billion. That's an X. So guys, this is a situation where I immediately look at it and go, next. Because I don't see anything in this that I've seen making me go, wait a second, this could be good. Because even though the revenue is increasing, I worry about the revenue sustainability. Is it going to drop from 13 billion? Even if it ends up being higher, it was still a year in which everybody bought online because they had to. So when everybody's done buying online because they had, now granted, you might sit there and make the argument, well, Paul, they're used to buying online, now they're going to continue to do so. Maybe so. But yesterday I was at lunch with my friend Michael Moskal, and we were at a restaurant we always go to through the pandemic. It was packed yesterday for the first time we've ever been. Packed. I looked at airline travel. Did you hear the airline travel numbers?
No, go ahead.
In 2019, I believe there's the numbers. On 6/14 of 19, there were 2.6 million travelers that day. Last year, there was 550,000. And this year, there were 2.1 million.
Just like that.
So we're almost back up to that level. So I look at it saying, okay, same thing with credit cards. If people are back to going in the store and you go to Dick's Sporting Goods, they're not using Square. You go to, all these things I look at going, is it possible people are going to keep their pattern of buying online for all those small? Yeah, it's possible. Is it probable? I don't know. So for that reason also, along with the valuation, I'm just not even buying this company. I'm going to wait.
Mo, I can see from here, if you're into Bidnass Nation, look at this Square chart. Now, I'm the employed trader, so I'm now a specialist. I have about 3 hours of trading under my belt, but look at these charts. I know where you're headed with this one. Go ahead.
So it's looking interesting for sure. I know, though, I just checked the other one. We're stuck right at our 100-day moving average. So you actually saw it bounce up a little bit today, and you have that little wick on top. That's a little pullback. So it's going to need a lot of volume to push through that 100-day moving average. I'll use green, like so. And let's just get this thing moving up into the sweet spot. and then you're going to contest with these resistance points. So most ideal situation, this thing just starts moving, gets over the 100-day moving average, doesn't have anything to deal with, starts making all-time highs, and goes on that way. Now, is that going to happen? I don't know. This Square, though, is a great stock to day trade. I know it's a little bit more expensive as far as cost per share goes, but the way that this is structured, it has a very high beta. It's volatile. What's it moved today? It's moving 1.5%. That's pretty typical. So you can go in there and trade Square on a 15-minute chart. This is a fun one to use in that regard.
And I do want to repeat, guys, a lot of people are commenting, well, Paul, my local barber, my local... Yes, my whole point about it, though, is I think Square was very useful. I just sit there and say, I'm not sitting there saying Square doesn't have a lot of potential. They absolutely do. And I do think they're going to do very well on the small business front. Very much so. I believe Square is better than possibly Stripe. Stripe is better for developers, but Square is great for users. I'm just sitting there saying to go from 5 billion to 13 billion because of a very specific reason, and that reason's now gone. I'm not saying that 5 years from now they're going to have higher revenue, but the time being, are they going to take a drop? That's the question I ask. That's it. And because of the 290 times, and they had 13 billion in revenue, it still had lower free cash flow, and the cash flow was 16 million, and even their best cash flow number of the last 5 years still puts the company at freaking 200 times free cash flow.
Yeah.
I'm out.
Yeah.
It's that simple. It's like, listen, there'll be a better time to buy Square. Square might be a $200 billion company when I invest in it, but at that point, they're probably making over $10 billion a year in free cash flow. Mm-hmm. I'd rather invest in a $200 billion company making $12, $15 billion a year in free cash flow than a $100 billion company making $500 million in free cash flow, hoping it gets to the $200 billion mark. Mm-hmm. That's my philosophy. I will give somebody their worth once they've earned that.
CJ's saying, wouldn't you think that Apple could just crush this and take over and make if they wanted to? It seems like Apple could do anything they wanted.
They could definitely make a run.
If I'm Apple, I'm waiting for a crash. I'm waiting for Square to plummet, and I just acquire it. Because guess what? How much I have $200 billion in cash sitting around, and if they fall by 70% in stock value, I can buy them for $30 billion.
And they have the infrastructure in place.
Yeah. But I would say this. How much is Apple being charged by Visa, MasterCard? Because there's like 30 companies in the world, 40 companies in the world that go directly, maybe it's more than that, go directly to Visa, MasterCard. They don't go to an intermediate person like Square or like local companies here. And they're getting amazing deals. That's people like Amazon, Walmart, Target, Apple, things like that. They're doing high volume.
So I do think that I think they're waiting for something like that with one of these payment companies. I also think they're going to make some kind of acquisition of one of these smaller EV companies just so they have the infrastructure in place there too.
Nicholas is asking, is sitting on cash wasting an opportunity or waiting for the right opportunity?
Great question, Nicholas. Nicholas?
It is. Studa.
Oh, Nick. Yeah, I've seen him name a lot in the chat. It depends what you're doing. Are you saving for retirement or is this extra money? If it's your retirement money, I just think it's a bad idea. I think you should take your cash, split it up into 12 to 24 payments, and every month for the next 12 to 24 months, buy into the market and know you're buying at high levels and lower levels. I just don't think for retirement you should be trying to time the market. I just think that's a bad idea. Now, if you're a very wealthy individual who has multiple streams of income, doesn't need to worry about that, different story altogether. But for most people who are watching our channel, they're people trying to save for retirement. I don't know. It'd be interesting to find out who the wealthiest patron is. The only one I know, one person who has a few $1 million.
Yeah, I think I know who you're talking about.
Yeah, that's it.
He's in Paul Super Shorts?
Yes.
Yeah.
So I look at that saying, okay, and even that person, I wouldn't recommend that they.
Right.
I would recommend that they.
It's not that incredible amount of wealth.
just still. It's not FU money where if your money goes. It could still be a problem if you miss out on a big bull market.
Yep.
Dan is asking, so coming back to Square, what is your ridiculously low price you'd want to buy this stock at, Paul?
Oh, jeez. Okay. So let's put in our stock analyzer tool. Square.
So last March, actually before COVID, this was an $83 stock. It's gone up triple since then.
Okay. What's the revenue growth number for Square? Let's call it 30% a year. They're issuing shares like crazy, 2% a year. Let's say we take a market value, future PE. Let's call it 20 to be aggressive. Profit margin. Let's say the profit margin increases and goes to 6%, which we haven't seen in the last 10 years. Free cash flow as a percentage of revenue. Again, 6, and price of free cash flow 20. How many years? 7 years. $120 a share. And that's assuming these are all correct. And what's it at right now?
227.
Yeah.
Yeah. So it's got to fall in half. And it's assuming, by the way, that these numbers are all accurate. I've never seen this. I've never seen this. And I'm still giving aggressive numbers for the multiple free cash flow earnings. I've never seen this. And I haven't seen this either. I mean, there's a lot of assumptions here made, guys, that haven't been seen. I'm sitting there saying, okay, they're going to cool down on issuing shares. The profit margin is going to increase. All these things are happening. There's still assumptions being made here.
I'm still surprised by that cutting it in half number.
Yeah, I am too.
I thought it would be a lot lower.
Now, ready?
Yeah.
Let's look at our number.
Why don't we put in our assumption?
3%. I want 12% return. Future PE of 15. Profit margin of 5. 15. My number to even start looking at it, $68.
That sounds more reasonable.
Right?
Yeah.
$68. And they're issuing 2% more, 3% more shares per year. If they're issuing 0, they just stop issuing shares and just stay stable. It becomes $80.
Okay, here we go. March 18th. The low, $32.33.
Yeah, they skyrocketed.
Yeah. So don't say it can't happen.
And by the way, that'll show what will happen with expensive companies like this during another downturn.
And the companies that do this on the way up are the companies that can do this right back on the way down.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.